This means the first social impact bonds have to be designed and executed with great care and precision. And the early lessons from the first SIBs need to be shared broadly. And finally, for social impact bonds themselves to go to scale, they will have to become much more standardized. At the moment, as they're contemplated, SIBs are highly bespoke. If you've seen one SIB, you've seen one SIB. This is to be expected in a nascent market, but for SIBs to move from novelty to mainstream, this has to change. So people get very passionate about social impact bonds and other pay-for-success approaches and sometimes lose sight of the fact that these are simply tools. They're a means to an end. And we believe that the social impact bond can be the right tool in some circumstances. But in reality, social impact bonds are more expensive and complicated than if a foundation makes a grant or if government contracts directly with a service provider, which means that SIBs are a good way for scaling what works, but that the types of programs that should be scaled with SIBs are specifically focused on prevention, and they're programs that deliver more benefits to society than the remedial programs that they replace. They're programs that have been proven to work. We don't think social impact bonds are an appropriate way to test new innovative approaches. That's what grant funding is still ideally suited for. And we think that SIBs need to fund programs that are demonstrably scalable and replicable, and that address the needs of a meaningful number of people to make it really worth the headache that this new approach will entail. So in summary, social impact bonds are just one tool in the social sector toolbox, but we think that they're part of advancing the conversation about how to marry financing and social impact, and we think that it's an important discussion. We're glad to be part of it.
Thanks very much for that, Laura. I just noticed that some more of the reports just appeared on that table over there, and so hopefully everybody will be able to get one. Now it's time for Tim to talk a little bit about BRAC and BHIP and what he's doing.
No, I'm just going to talk directly. Great. Well, I'm an outlier on this panel because I'm not going to talk about a specific financial product per se, but rather look at an idea or set of ideas that are in development which may be beneficiaries of this suite of financial products that have been developed or that are developing and which could be very applicable to the rapidly changing context in Bangladesh. Let me just begin by stating a little bit about the context in Bangladesh, recognizing that there was some orientation this morning with Asif Saleh when he presented BRAC. I'm part of the same institution. I'm part of their university, and I run their School of Public Health. But the bigger context in BRAC and Bangladesh is very interesting. BRAC, in many respects, was doing most of what's being talked about here before there was vocabulary to describe it. They have been using market mechanisms, innovative financing to achieve social objectives as really a defining part of their institutional culture. They were using incentives for performance before people were talking about results-based or performance-based financing or KPIs. And so the culture of the institution has been very entrepreneurial all along. And this relates to a broader context in Bangladesh where a lot of the rapid change related to greater than expected growth of the economy and improvement in health have been very much a function of an indigenous affinity towards entrepreneurial solutions, particularly in the context where you have a social sector in the government manifestation, which is not particularly distinguished relative to other governments in other countries in terms of leading on the social sector. And so in many respects, Bangladesh has defied Henry Kissinger's diplomatic dismissal in 1971 that it was destined to be a basket case. And if you look just in my area, the rates of improvement in health have been amongst the fastest ever witnessed in history anywhere on Earth. And so one raises a lot of questions about how did this happen. Now, BRAC has had a health program for 25 years, and it's achieved a lot through what I would call a very traditional financing approach, which was they came up with ideas related to addressing particular health issues, and then donors would generously support those over a period of time. And childhood immunization, maternal reproductive health, tuberculosis treatment, a whole set of innovations in terms of scaling up those programs to reach 150 million people in Bangladesh have been sort of the hallmark of its performance. But the financing has been one which has been quite traditional. And as the context evolves in Bangladesh, and it's evolving very quickly, there's been a lot of questions about whether this is the right model for BRAC health programs moving forward. And so in the last year or two, we've been saying we need to really adapt to a new reality in Bangladesh. And it's really the reality in the context of the health economy that is growing at about 11 to 12% per annum, which is about twice the rate of the official GDP. And most of that growth, the lion's share of that growth is in the private sector. So the government share of financing of healthcare in Bangladesh has shrunk from about a third in 1997 to a quarter at this point in time. And if you project that out to 2025 or 2030, then it's likely that government financing in health will be less than 10% of the total. So you have a massive private sector mobilization in health, and that is not being thought of in a very comprehensive approach to financing healthcare of the entire population. It's driven very strongly by for-profit boutique operations that cater to populations that can pay, and the primary mode of financing is direct out-of-pocket payment at the point of service. The problem with that is that about 6 million Bangladeshis at present are becoming impoverished by paying for their health care. The other problem is that we're not likely to have a British National Health Service or a strong government response because tax collection rates in the country are about 10%. And so one has to therefore look to the private sector to come up with more equitable approaches to financing healthcare and protecting people from catastrophic health shocks and debt. And so BRAC Health Programs has been doing this, rethinking of the design of their program, and has created something as a design phase sort of social enterprise incubator called BHIP, and that's BRAC Health Innovation Programs. And there are 3 I's, drawing on the theme of this conference, 3 I's of innovation, 3 areas of innovation that are characterizing this BHIP. One is looking at how to develop a model of primary care which places home-based primary prevention and close-to-client integrated services as the defining hallmark of health programs as opposed to facility-based, hospital-based services. So that's one innovation, and there's a lot of work that's going on that front. A second relates to financing, which is to move towards prepayment systems, which would be of a more social health insurance, however, recognizing that the culture of making payments for premiums is not one that comes naturally, and therefore requires a lot of innovation with respect to getting compliance. And the third is taking advantage of the information technology revolution, which is allowing continuity and access to care through mobile devices and smart cards which are changing and transforming the whole intersection with the healthcare sector. So those things are moving on and could spawn into one or multiple social enterprises. But the one thing I wanted to focus on before closing is something that we're looking at, which is particularly looking at trying to protect people from catastrophic and payments for their health. And this is something called a buffer fund. What we're looking at is that given the numbers of people that are adversely affected in an asset-depleting way through payments for healthcare, could we not sort of flip the microfinance character of BRAC, which it built its reputation on, and think about providing loans to these individuals who are exposed, who incur catastrophic illness events, and stretching out over time the payment for those costs of healthcare in such a way that it doesn't compromise their asset generation capacity. And so we're looking at, first of all, what the nature of that demand is, and we know it's big, but more importantly, we're thinking about what might be ways of putting together a capital fund, what might be ways of generating that, what might be ways of looking at different stratifications for potential beneficiaries in terms of the interest rates that they might pay over time, and what would that look like in terms of sustaining a fund? Would it be something that could be a break-even fund? Could it offer a rate of return, or could it, with a subsidy from interested parties, be something that would be sustainable, but because of the social bottom line of preventing impoverishment, still be seen as a worthwhile investment? So just throw that out there at the moment. We're working with IIX at the moment on thinking about how to develop this. It's very early, as you can tell, but it may be something that would benefit from some of the thinking around some of the financial products that have been presented on this panel, or some of the ones that others in the audience are thinking about. Thanks.
Great. Thanks very much for that, Tim. And you know, what you can hear from him is what's so exciting about this panel and this whole sector, I think, which is still that there's unsolved problems out there that we can all work together to solve. Next coming up, we have Pradeep, who's going to tell us about the social stock exchange.
Thanks, Matt. Right, let's. I'm gonna keep this fairly short. You don't need to see the disclaimer. Right, the social stock exchange. We're based in London, and we are building a public equities capital market for exclusively for social enterprises and social purpose businesses to list. As Matt was saying, it's very, very similar to what Impact Investment Exchange Asia is doing. The models are very comparable, if in fact not identical. I don't want to go too much into the social stock exchange itself. I don't think we're the exciting part of the story particularly. Most people know what stock exchanges do. We have qualification mechanisms for the social stock exchange, and that being the publication of a social prospectus in which the social enterprise or social business is able to articulate their theory of change, to enable them to describe what kind of social environmental problem they're seeking to solve, and to account for the social value that's created as a direct result of their activities. We don't exist yet. We're still building. We're partnering with one of the exchanges in London. We've just finished raising £2 million of our working capital to launch this the stock exchange, and we envisage doing that in the first half of the year next year. But what is interesting about what we are doing and why we are doing it, and the theme of this conference is igniting financial products, which I probably should have said instead of enabling financial products. But that's what stock exchanges do. our thesis for developing the social stock exchange was to allow impact investors to more easily and readily find social purpose businesses that they'd be interested in obtaining the dual bottom line, both the financial and the social return on investment. These are primarily family offices, foundations, trusts, etc. However, if you really think about it, to unlock capital at scale, to solve some of the more intractable problems that we have globally in terms of the environment or in terms of the needs of society, you have to tap the investment from retail investors. And of course, there are two types of retail investors. Retail investor type 1, which is a high net worth individual, and for whom we're seeing increasing appetite to invest in impact investments and social businesses that are trying to solve these kind of problems. And the other type of retail investor is actually the individual, the person on the street. We call it citizen capital. And these kind of individuals are very interested in also making impact investments. Now, a stock exchange which provides tradable public equities is exactly the kind of venue for which ordinary citizen investors can place their money. All you need to do is phone up your stockbroker, you have an account, and you want to buy 300 shares in Ethical Property Company or something similar. And equally, where the big demand from the high net worth individuals is coming from, they want to make impact investments as well. However, the inhibiting factor tends to be their wealth manager or the investment manager. No investment manager is going to make allocations of their client's money to anything that hasn't got a daily valuation or mark-to-market pricing or an ability to get in and out through a liquidity event for that particular stock. So really what needs to happen next in our, in our ecosystem, I believe, once we have these social stock exchanges, is really the development of new financial products which are actually effectively collective investment schemes. Which have as their underlying security, generally speaking, public equity investments on recognized or stock exchanges. And that's the real reason why we're creating this kind of a market venue. In the UK, the UK government is always talking about creating social ISAs. These are individual savings accounts. It's basically a tax wrapper. And they continually forget that actually within an ISA, you need to have underlying equities on a recognized stock exchange. Similarly, the same people who brought you in the UK the social investment bond are also creating something called a social VCT, a venture capital trust. A venture capital trust is able to invest in both private companies and also publicly listed stocks. But interestingly, the VCT itself needs to be listed on a main capital market, on a stock exchange. So again, as part of what we're doing in building the infrastructure, part of having a stock exchange as part of our ecosystem is actually to enable some of these other financial products to exist. Similarly, social investment trusts and social open-ended investment companies, these are also products that need to be listed on exchange so that the capital that sits within them can be deployed both to private and to publicly listed companies. The whole social housing movement, at least in the UK, is gathering a pace. It continuously needs capital. And a very tax-efficient mechanism that the government has developed is something called a real estate investment trust, a REIT. And we're seeing increasingly now social REITs coming to the fore. Again, they need to be listed somewhere, and we're hoping that they're going to be listed on the social stock exchange. We're in discussion with FTSE, which is the index provider, to provide index products around the constituents of the social stock exchange. Again, why do we want that to happen? It's because those are the kind of products that retail investors are allowed to invest in. Again, you're able to, what we'd like to see happen is capital to flow back into the sector, both through retail products, but also eventually through pension funds. In the UK, it's surprising, and I say UK, but obviously the social stock exchange is going to be global in nature. But in many developed countries in which you do have pension fund provision, if you're a third sector, a social enterprise worker, it's very, very difficult for you to reinvest in your own sector that you work for through your pensions. Again, having publicly tradable securities, effectively equities, on a social stock exchange through products such as index products and collective investment schemes and pool products, mutual funds, etc. This gives the ordinary citizen capital, the ability to reinvest in their own sector. Again, what we'd like to be able to do in time is to create a bond trading platform. Again, we see lots of appetite for charity bonds, social investment bonds, impact investing funds, and of course fund-to-fund products, again, to be listed on the social stock exchange. And again, these are the social stock exchange in itself is only something that is there to ignite, to use the theme of the conference, ignite developments in financial products. And of course, if there is one thing that we would like to see happen, even if we do nothing else with a social stock exchange, it's to give the promise of an exit for early stage investors. One of the great inhibiting factors, I believe, in our whole space, our whole ecosystem, is that we have very little angel early stage capital formation, mainly because these early stage investors always wonder where the exit strategy is going to be for their investment. Again, a social stock exchange hopefully will allow more of that early stage capital formation to happen through the course of this promise.
Great. Thanks so much for that, Pradeep. Unfortunately, we can't be here for much longer. I mean, we've had so much food for thought with all these great presentations, but we do have time for a couple of questions from the audience. So I think there's a microphone in the middle if you want to get up and ask a question.
Hi, my name is Senefonia Vendis, and I work for a for-profit company called Vestergaard Fransen based in Switzerland. Thank you for the presentations. My question or comments are specifically related to the social impact bonds. We're a company working to support the achievement of the Millennium Development Goals, and specifically within health, food security, and climate. But my question relates more to what we're doing within health. And we as a company represent the private sector in a partnership called Rollback Malaria. And we've been working for the last 18 months on the establishment of a malaria bond, which is actually based very much on the thoughts of a social impact bonds and is modeled around the UK social impact bonds. And I had a few learnings around that I wanted to hear your perspective on. And one of those were around the government's ability to actually commit to multi-year funding. Because once you get engaged in this, it is a multi-year enterprise that you're involved in. And this has proven to be a challenge, at least within development aid. The other one, which was counterintuitive, I think, to us in the work that we were working on, is that the government is actually faced by two different risks. One is performance or non-performance of programs, but the other one is using their budgets. So if they don't utilize their budgets, they're at the risk of not getting renewed their budgets the years after. And that actually is counterproductive in terms of going for a performance-based model or a pay-for-performance model. So I wanted to hear your perspectives on that. And the last question I had is that on your model, you had a non-for-profit implementers. And I wanted to ask why you have limited that to non-for-profit and why private service providers actually wouldn't be able to come in and be able to create cost efficiencies in this field as well.
Okay, so let me talk to the general question of taking the social impact bond pay for success approach and trying to apply it in international development, and hopefully cover your specific questions as I do that. So the Center for Global Development in Washington, D.C., working with social finance in the UK, they're starting to think about how to take this approach and apply it in international development. And both in the international context and in the domestic US context, people are definitely thinking about how this approach could be fitted to an area like health, right? What we concluded in our research is that the social impact bond is best suited for interventions that are really behavior change interventions, as opposed to making social goods or services available. What do I mean by that? So the example I gave about addressing chronic homelessness through permanent supportive housing, the example in the UK about working with short-stay prisoners so that when they get out of incarceration, they have a network of support, they have employment opportunities, they have a place to live, they have substance abuse counseling if they need it, right? They have a set of wraparound services, case management, social support. Those are the types of examples of behavior change interventions, as opposed to access to clean water, access to bed nets, access to vaccines, right? Those are more social goods and services. If your intervention is a social good or service, we think a more traditional market-based approach is very suitable. You may need to tweak the market. You may need to use something like an advanced market commitment. You may need to right-size the product or service for the population you're trying to reach, like microfinance does, right? But if you have a good or service where a market signal tells you that you've achieved your goal, you don't need to do ongoing analysis to see if it's been effective, then the product or service is well suited to a market approach. If, however, there is you need the case management, you need the accompaniment, you need to study over a period of time to understand if the underlying intervention is being successful, we think a social impact bond is well suited for that. The question around government commitments, multi-year contracting, multi-year funding, those are questions that are coming up in the US as well, where there is a municipal bond market where there's the tradition of government full faith and credit standing behind a bond that a city or state would issue. The social impact bond in the US is not being contemplated at the moment as having full faith and credit of the government. There are conversations about whether that will be necessary. Basically, the market's going to set the bar. Investors are going to either indicate that they want the social impact bond to look more like a municipal bond with that sort of government support, or they are going to signal that they're comfortable with this being a multi-year contract. Governments enter into a lot of multi-year contracts that are beholding to annual appropriations, and there are a number of vendors who are comfortable working under those contracts. So there's a question of whether social impact bond investors will be comfortable doing that. The question about nonprofit versus for-profit, because we believe that behavior change interventions are best suited for social impact bonds, we're finding that most of those interventions are currently supported by nonprofit organizations. Again, if it's a good or service, a social enterprise model or a for-profit model may be suitable, and you may find examples of organizations that are providing that good or service. But for the sort of behavior change interventions that we think are most suited, we find that nonprofit providers are typically the ones making those available. So I think I'm going to stop there, but happy to talk afterwards.
Actually, in the first year, we only are seeking to have 16 securities on the social stock exchange, so it's very small. Having said all that, when the last important capital market was created in London, which is something called AIM, the Alternative Investment Market, which is run by the London Stock Exchange. It only started in 1995 with 10 companies. It now has over 1,200. So critical mass is, in the context of our sector, I think if we can get to about 170 companies in 5 years, I think that'll be an astounding and resounding success. What you also need for critical mass in terms of product creation, when we talk to our friends at FTSE, the index provider, basically if we have a constituent of about 20 stocks, they can start creating index products around that. So it's critical mass can be as small as that in order for the ignition of some of these innovative financial products to take place. Is my minute up?
Yeah, that was great. Well, thanks everyone for coming. I hope this is just the beginning of the discussion. I know a lot of us are going to be around the next couple of days, so we can continue some of these discussions in the hall and in future months and years ahead. Laura's report is available over there. If she runs out, come find me. I'll make sure you get one. And enjoy your break.